Well, welcome back, everyone. It's been a storied week in markets with MAG7 stock earnings, geopolitical risks rising, economic data coming in sideways to down in most cases, and next week is really a doozy. We've got the FOMC, we've got the majority of the MAG7 stock earnings, and of course, we've got a market in a bit of peril on the geopolitical risk side. Let's get right into where markets are at this stage, as I record this video into the end of the day on Friday at around 3:23 p.m. Eastern Time. You can see the primary market is holding above the center of a long-term uptrend channel. That's the area where, if broken, we've got a lot more downside risk. Let's zoom into the hard right edge of the pattern after acknowledging the fact that we were in a longer-term late-stage uptrend that went into a topping zone after the tariff tumble. We did have that 10% correction. That 10% correction happened over March, and then we saw April and May boom, 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 up, and away. However, we ended up getting a supply pattern in the lower 7600s and an ascending triangle formation. Is this market waiting for the rest of the MAG7 stock earnings? I do think so. When we take a look at the S&P E-minis in that zoomed in view, we still see that 75-55 area where we've got a set of nested volume point of controls from the volume point of volume profile histograms going back in time. They're all located and concentrate in that 75-55 area. Above there, the door does open for more upside, i.e. towards the all-time highs and or higher. However, what we saw in yesterday's market, on Thursday's market, for example, was geopolitical risks grow on top of the market being dismayed with Tesla and Alphabet's earnings. We did have an opportunity to push up so far in the Friday trade, but it unraveled back down. Note, though, we have not come down yet. It is still another 35 minutes of cash hours trade, but we have not come down yet to take out those lows. If we happen to rally back up above the 74-75 area, there is a higher probability that we point up on Sunday night into this resistive ceiling, or at least rising towards it. However, if we do close below the 74-75 area, the likely outcome is we come down into the center of that long-term channel and then likely a bounce. Now, the NASDAQ really is in control of the tape, and the NASDAQ on that long-term uptrend channel is very close to the center of that range. Let's zoom into the hard right edge and get a sense of where it's at. Effectively, you've got the NASDAQ at the bottom of a downtrend channel from the middle of June. When you take a look at it on that long-term uptrend channel, it is very, very close to the center of the channel. The danger line, as you heard in videos just like these in the days past this week, 28,450 is that danger line. If we break down below it, we can come down and make lower lows, and we are rivaling the lows that we saw back on June 9th, 10th, and 11th. Nonetheless, this market is very tradable. There's a lot more volatility. The ranges are grander, allowing for a lot more strategies to be employed upon the market. I've been doing just that. Now, before I go and show you that, I want you to know that if the NASDAQ does come down towards that 28,080 marker, it is more likely to slow down in its selling and even more likely to give us some form of a bounce. Now, that would be right in the nick of time for earnings season, of course, for the MAG7 stocks that are providing their earnings on Wednesday and Thursday this week. So Wednesday, we've got Meta and Microsoft. Thursday, I think it's Apple and Amazon. And of course, we've got the Fed next week. It's a busy week indeed, but a very tradable week. For those of you that want to employ trading strategies that are high probability, well, let me share with you what I've been doing. Here's my multi-time frame dashboard using the Champion Trend Pack Toolkit and the Triple S Toolkit with that incredible pre-trade conditioning pattern, the PTC pattern. Something that I've shared with you in videos just like these. For those of you that want to learn a little bit more about that, I'm going to invite you to a very special session on that in just a moment. But here are my trading results so far on Friday, July the 24th, up another 2.3K, taking my tally up to over 16K, 16.6K plus. So good showing that, of course, that we've seen this week overall. And you've seen me in the active trader room and on WealthCharts do well in my trades overall. I'm looking forward to sharing that knowledge with you using high probability patterns. I've been trading a variety of accounts, low contract size trades. And what we know when we take a look at the S&P E-minis and we take a look at the pre-trade conditioning pattern that we see right over here, down the hatch we've gone. I want to share how that pattern works, how to actually execute against it. And I'm going to be doing just that with you on a very special session next Wednesday. That session is going to take place on Wednesday, July the 29th. Go to becomeabettertrader.com/yes and join me on Wednesday, July the 29th at 10 a.m. Eastern Time. It will not be recorded. It is a do not miss session. It's where I'm going to show you my raw, live tactics using the tools that I built to make better decisions in markets. And of course, we are in a market that is still in peril. This market has not gotten out of that red as of yet into the end of the day on Friday. I know you're watching this on probably Sunday, so keep in mind, we still have a little bit more left to go before the market ends its trade on the day. And where it's sitting right now for the NASDAQ is well below that danger line of 28,450 points, with risk to come down and actually test the center of the channel. If that so should happen, we're likely going to see a bounce up off of that area into Sunday night, Monday morning. We are in a deeply oversold state. If we are to close where we are right now, we would still expect a dump and pump over the course of Sunday night and Monday and potentially Tuesday. Wednesday next week is really the key decision day for direction on the market, and the primary market really must sustain above the center of its channel. I think the NASDAQ has got some downside risk at this stage. That downside risk is going to be a dump and pump. More likely, we point up Monday and Tuesday, waiting for Wednesday's MAG7 stock earnings and, of course, Thursday's MAG7 stock earnings. Watch for the S&P E-minis to get above the 74.75 area to give us a sign that stabilization is to come, and above 75.55, stabilization is here. And of course, that has to be engendered by the NASDAQ. So do join me on Wednesday, July the 29th at 10 a.m. Eastern Time for this very special session where I'm going to be sharing with you and teaching you how I use my tools to make better decisions in markets with a combination of Rob's Champion Trend Pack Toolkit. There's going to be some great examples there and some great learning. Go to becomeabettertrader.com/yes, and we'll see you at that session. I hope you have an incredible rest of your day, and thank you for watching.